I'm so excited to talk about Lululemon, go through its latest earnings. I'm going to talk about the latest highlights, key takeaways, red flags, risks, and should you buy, hold, or sell. And of course, I'm going to give you my valuation. So we're going to do a bit of stock analysis today. So if you are a Lululemon investor or you're an aspiring Lululemon investor, you got to check out today's video. Hey everyone, I'm a Canadian YouTuber that loves talking about stock investing, real estate investing to create multiple streams in income so that you can live your best life. So if you haven't subscribed, please subscribe. It is free. Just hit that bell notification button so you get the latest and greatest videos coming to you every single week. Hey everyone, before I jump into the key takeaways and highlights, just want to let you know that all of this information you can find yourself. You can just go to Lululemon's Investor Relations. You can download the 10Q report. You can look at the infographic. You can look at the annual reports. There's so much information about Lululemon. Of course, you can also look at Yahoo Finance, which gives you a lot of the metrics. Now, because this is a late stage growth company, I'm expecting double-digit growth in revenue, double-digit growth in its net income, and well, stable profit margins, or ideally improving profit margins, because I'm picky. Now, looking at Lululemon's latest earnings report, it's like amazing as usual. Every quarter, it's been beating or meeting expectations. It is totally killing its Power of Three plan, which is doubling men's revenue, doubling digital revenue, and quadrupling international revenue in its 5-year growth plan. Just so that you know, I am always measuring Lululemon against its Power of Three plan, which was released in 2019. So going back to the Power of Three plan, we could see that men's revenue is like 44%. Women's revenue is 25%. So obviously the big focus is on men's revenue, which is, again, killing its plan. I mean, when I mean killing it like in a positive way. And I'm happy to say they are crushing it. They're beating their plan. It just shows their amazing execution. For example, in North America, they're still getting double-digit growth in their sales. So even though they've pretty established in North America, they're still growing at a 28% year-over-year growth in North America. And then most importantly, they are killing it internationally. They have 40% year-over-year growth internationally, and they're totally focusing on China. Now, there was something really interesting in its latest earnings report. I noticed that its digital revenue represents 40% of the total revenue that Lululemon is generating. So what does that mean? That means that this digital revenue growth is still growing despite the fact that we are trying to return to normal, and it's still growing in that area. And what does that mean? Well, that means like more moolah. So I'm expecting that profit margins are going to get better over time because, with digital revenue, you don't have to carry brick and mortar assets. It's just direct to consumer. So that's like amazing. Another cool thing is I noticed in its transcripts and its earnings report that, well, the supply chain issues really didn't affect them as heavily as the rest of the companies. So they've had amazing execution where they've had enough inventory to fulfill the Christmas sales. So that's just like, woohoo! And Lululemon is growing double digit in earnings and in revenue, which is why they're crushing it, and it's reflected in their stock price. And as expected, market expansion is doing really, really well. And they are on track with opening the stores that they've always wanted to. In fact, I actually estimated the amount of stores that they were supposed to open, and they could potentially exceed even what I projected out, which I think is like amazing. It just shows that they are really killing it when it comes to execution. Now, another key takeaway is that their mirror sales aren't going to do as well as what they projected. I mean, it sounds like it's a very tough market, especially with supply chain issues. But the good news is that while the mirror sales are like peanuts compared to its total revenue, I think it makes up like approximately 3% of its total revenue, which is like basically nothing. So if you actually evaluated Lululemon's footprint around the world, turns out internationally is less than it's approximately 30% of the footprint worldwide, which means there is a ton of potential. And they've said in the past that the international revenue could equal to North America's business. So that's like amazing. So hey everyone, I just want to pause and share a couple awesome resources that I have that I think is going to help you in so many ways to help you build a 6 or 7 figure stock portfolio and build a lifetime of passive income. I have an ultimate guide to dividend growth investing. This is full of actionable tips, no fluff in there, filled with practical advice so that you can start or restart growing your dividend growth portfolio. So Be sure to check out the links in the description below. I also have a waiting list for my Financial Freedom Accelerate course and coaching combo. Ooh, last time I shared this, it was sold out. So be sure, if you're super interested in building a 6 or 7 figure stock portfolio and a lifetime of passive income, guided by me, personally me, and important things like taxes in Canada. So last time I did this, well, it was sold out. So if you're super interested, please sign up in the waiting list below so you get notified when enrollment opens up. So be sure to hit that link in the description below. Okay, let's get back with the video. As much as we love Lululemon, I want to talk about the key risks I'm seeing with Lululemon. Number one, now, this is a positive and a negative. So Lululemon has a multi-year agreement with the Olympic Committee, which is like awesome. So it's going to represent the Canadian team for many, many years, which is great from a revenue and brand perspective. Why I'm kind of picking on this is because, well, I noticed Lululemon's latest Olympic collection is kind of like so-so. So in a way, it could kind of deter people from buying Lululemon, but I don't know. Who am I to say? But I'm just trying to get it. Maybe I'm just pickier. I'm just not super impressed with the Olympic collection. Now, the second risk I'm seeing, now this one's more obvious, and because a lot of companies are actually going through it, and that is the supply chain issues. They even pointed this out in its latest earnings report that they are projecting potential supply chain issues, which means that it could disrupt their inventory in the future. So this could be something, could be a rocky road next year for Lululemon. The third risk I'm seeing, now this has to do with macroeconomics, okay? Well, we know that right now we are completely fueled by cheap money. Okay, the stock market, the whole economy is fueled by cheap money because interest rates are ultra low. And we've been given a lot of warning that interest rates are going to rise as early as next year by Bank of Canada, like April 2022. Now, given that the inflation is also running high, this is why they're going to raise interest rates to try to control it. Now, what does this mean for Lululemon? Well, Lululemon is a growth stock, and a lot of its future revenues in the future, well, obviously, because I said future revenue, but what I mean is that when it gets discounted to today's dollars, it's going to be against a higher interest rate. And that means that Lululemon's actual stock price could actually be hit pretty hard next year. Now, this is just my best guess. If history repeats itself, this has happened many times before, where if interest rates rise, there's going to be a bit of a pullback or a rocky road in the stock market, and that's going to affect Lululemon stock. Now, how does this affect Lululemon's company? Well, if inflation is running high, then that means materials are costing more, and that means that in reality, if they don't raise their prices of their apparel, well, it could hit their bottom line. So this could be also a bumpy road just in managing inflation within their company. So I'm going to give you my valuation. I'm going to give you my bullish price target. I'm going to say bullish. It's not super like optimistic because I'm a cautious investor, but at least it gives you an idea what I'm thinking personally for me as I'm holding on to my Lululemon stocks. So with a double-digit growth for the foreseeable future in its revenue and its net income, I'm expecting in a few years that Lululemon will at least hit $13.50 earnings per share. So if I use a PE ratio of 45 and expecting an improving profit margin around 16%, well, I'm expecting that Lululemon could be trading around $600 to $625 per share. Now, of course, I just spat out a bunch of assumptions. So I'm assuming that first, its PE ratio is going to be 45 in a few years. I'm expecting that there's double-digit growth for this foreseeable future. Now, given this bull case, is this realistic? Well, I just said it's actually bullish. So it's not what I would say super realistic. Is it possible? For sure it is possible. If past performance is any prediction of future performance, well, Lululemon can definitely hit those price targets, if not sooner. So with my valuation, I didn't even include mirror sales, okay? And that's what I love about having Lululemon stock. I love having that optionality. See, I could predict fairly confident that Lululemon is just going to do its thing, which is doubling its men's growth, doubling digital revenue, and quadrupling international sales. But the mirror sales, if that is successful and they happen to grow their membership and their subscription model, well, that could bring Lululemon to another level. which I really hope it plays out, but I didn't include it in my price target. So that's why I love having that optionality in Lululemon. Big question, is it a buy, hold, or sell? Well, if my price target's around $600 to $625 per share, and right now it's trading around $400, so in terms of a few years, the compound annual growth rate is under 10%, which isn't super high for me. In fact, I could totally see Lululemon dropping 10% next year because if interest rates rises, there's gonna be a correction in the stock market. So for me, there isn't enough upside versus downside right now. So I would say I'm not selling Lululemon stock. I'm just holding on to it. I'm not buying anymore. I'm waiting for a bigger pullback for myself because the upside is so much higher than the downside. Now, I wanted to share a quick hack that you can all do just to check if a stock is overvalued or undervalued in less than 1 minute. This is like a lifesaver. So assuming, of course, you pick a high quality company like a blue chip company with pristine cash flows and revenue, no debt, like basically a stock like Lululemon, then you can use this quick hack. Of course, I have to add this in. This is not financial advice. This is only for entertainment purposes only. So getting back to the quick hack, if you find a company that has 10% year-over-year growth, that's likely considered a growth stock. So with growth stocks, a good rule of thumb that I use is if the growth is 10% year over year, I would pay no more than 2 times the growth rate in the PE ratio. So for example, if Lululemon is growing 20% year over year, I am not wanting to pay Lululemon more than a forward PE of 40, okay? Because 2 times 20 is 40. So I would look at a forward PE of 40, if not lower. Another hack you could do is look at the forward PE ratio and then compare to historical PE ratios. Lululemon in the past 10 years has fluctuated between the low 15s to the 30s to the 40s, and recently to 65. So that just shows that, well, of course, Lululemon is trading at a rich premium. Now, if you believe Lululemon could sustain its growth rate, if not surge even higher, so say, for example, right now it's between 23 to 26% year-over-year growth in its revenue, in its earnings, which is like amazing, and it surges to 30% year-over-year growth, and it starts increasing its profit margin, then maybe Lululemon deserves this higher PE ratio. But right now with a forward PE, even at 53, I'm kind of like, I don't see enough upside for me. So for me, I'm waiting for the pullback. I'm expecting it next year because interest rates are going to rise, and that always scares the rest of the market. So then that's an opportunity, potentially an opportunity to buy a pristine company like Lululemon. Hey everyone, I hope you found this video super helpful. I hope you like the quick hacks. If you found this video helpful anyway, please smash that like button. Anyways, I'll see you in next week's video.